you look at the China thesis, right, you have, China's government trying the hardest over the past 24 months to inflate its economy. They've been doing, everything they possibly can, cutting its reserve requirement ratio for banks, cutting its reserve repo rate, lowering mortgage rates, right, doing everything they're supposed to. Quick primer, lower rates help increase consumer and business spending, which leads to stronger economic growth. Strong economic growth leads to higher stock prices. It also creates more tax revenue, which makes it easier to service debt. Okay, so if you're looking at lower spending, Doge isn't going to solve our problem because we're not going to be able to stop spending. We have so much spending. It's where we want to try to inflate this market without creating inflation, but have this economic growth, because economic growth solves everything. And Daniel and I were talking about it. It's like if you could have the shittiest continuity between a basketball team, a football team, or whatever, if you're winning, it solves everything. Everybody's happy when you're winning. No matter what, you're happy when you win. And once you start losing, then the shit hits the fan. So when you're seeing all the stimulus coming in, this is why so many pundits, including David Tepper, was like, I'm bullish on China. And this was from September, because he said, listen, they just announced a bazooka plan, right? Which is, putting this thing even on steroids. That thesis has totally gone to shit after Trump unleashed tariffs.